What's up, you guys? Welcome back to the channel. In this video today, we're going to be talking about why commercial real estate operators are stopping distributions to investors and why some of my investors are actually happy about that. Hey everyone, Lucas Miller, multifamily owner and operator, and I put these videos together to help people navigate the world of passive commercial real estate investing and how they can better equip themselves to vet these sponsors, put these deals in front of them, and start making some passive cash flow and using some of that stuff to build wealth. If you know you should be investing in real estate, and come on, everybody knows they should be investing in real estate. If you know you should be investing in real estate, but you don't have the time or the expertise or just the general desire to want to learn all this stuff, passive investing might be a good way for you to jump into that realm. It's not for everyone, but it's a great way to build some wealth and generate huge tax incentives. But part of that whole building wealth part is actually assuming you're going to get that check every quarter or every month or however often your passive investing distributes investor returns. So why did most of these commercial real estate operators stop distributions as soon as this COVID outbreak started getting really big in America? Well, I'm going to give you my experience as a commercial real estate operator, specifically multifamily. But before we get into that, if you've gotten any value from this, I got a quick favor to ask of you. If you could please do me a favor and just go ahead and hit that like button below. It takes half a second. Just go ahead and click it right there. It's going to boost the popularity of this video in the YouTube algorithm, and it's going to help more people see it and help more people get started on that passive investing journey. Thank you. All right, back to the video. Now, I can't speak for everyone, but I've talked to plenty of multifamily owners and operators, and a lot of them are stopping distributions. And it's a smart decision when you get down to the nitty-gritty of it. And a lot of public figures are doing the same thing. People like Grant Cardone, who I have criticized, right? I said, Grant Cardone is wrong, and you can watch that video. Now, I think he's stopped distributions on all of his properties. I don't really know. I'm not an investor of his, but I think he has. And either way, I think that's the right decision to make. I think that's smart. It's a smart decision for all operators to do. And here's why. Having cash on hand is one of those love-hate relationships that all business owners understand. It can be great to have a ton of cash on hand for emergencies just like this, but it's also kind of a drag, right? That cash could be just sitting in an account, not doing something, and it's hard to amass that. It's the same thing in real estate. Of course, in the case of real estate investors, cash is super helpful because it allows us to pay our debt obligations, our insurance, our taxes, all these things that continually come up even if tenants aren't paying their rent. So cash is super valuable to real estate investors. However, the downside of cash is that you have to pay for it. And what I mean by that is there's a cost associated with amassing a lot of cash. If you're a residential real estate investor and you only have a single family house, you're not going to want to have $100,000 just sitting in the bank for emergencies, right? You're going to want to deploy that capital. So there's an opportunity cost for your capital. In commercial real estate, there's a much more tangible physical cost to us having a bunch of money just sitting there. If we have a bunch of money, that means we have had to raise that money or put it in ourselves, which means that we are paying investors for the pleasure of having their money in our deal. Let me use a scenario to explain a little bit better. If you know for certain that a project is going to cost $100,000, you have no doubt in your mind that that's the exact cost that is going to be, you can raise $100,000 for your project and with 100% certainty and 100% efficiency, know you did that correctly. But we all know this doesn't exist in real estate. This doesn't exist in business. You have to plan for the unexpected. So why not raise like 100 times more money than you need? That's extremely inefficient, right? That's on the other end of the spectrum. That's super inefficient, right? Because you're just going to have to give that capital back to the investors. And on top of that, you're going to have to pay them a return on that money, right? Because nobody's going to invest in your deal just to be that extra cash sitting in your bank account, right? They're going to invest in the deal and expect a return. So we know we don't want to raise 100 times more money than we need, but let's talk about the other end of the spectrum. A lot of real estate investors right now are really cutting their deals very thin, meaning they're not raising a ton of money for their deals because they want to keep that pool of investors very small so that everyone gets a bigger chunk. However, what that does to the deal is it puts it in a very risky scenario that if 1, 2, 3 major capital events happen simultaneously or very close and at hand, you're not going to have the money to pay for each one. And it's going to put you into a very tough situation, either foreclosure or bankruptcy or not meeting investor returns, things like that that you really don't want to be in. So that's why you have this bucket of money. In some cases, there's a couple buckets of money. In some cases, there's just a buffer. Most lenders require a certain amount of money set aside just for things just like this. So there is a minimum threshold, but we go above and beyond that sometimes. And that's really how it should be done. You don't want to be at the bare minimum, but you also don't want to be way over that. So there has to be a happy medium somewhere. The trick is finding out the minimum amount of money you have to raise to insulate yourself from any downturn while maximizing the investor returns that you can deliver to your pool of investors. If you're undercapitalized, you risk not being able to meet your obligations. If you're overcapitalized, you're going to dilute your investor returns by having too many cooks in the kitchen or too many pieces of pie. But let's get back to the original topic of the video. Why is turning off distributions to these a good thing for investors? Why are some investors actually thanking us for doing it? Well, you've probably guessed by now, obviously, by turning off distributions, it allows us to stack that cash so that we can go into this unforeseen future holding a bunch of money because we don't know where things are going to be. We want to have cash on hand. We want to have a full treasure chest to just meet any obligation we see. Now, real estate investors are blessed. Well, good real estate investors are blessed because we invest in something that pays us cash dividends. That is so valuable right now. How many businesses are closing right now because they don't have cash flow? Cash flow is one of those things that's critical for a business to operate on. And like I said, we're blessed to be able to have the option to turn off distributions to our investors and stack that cash so that we can face whatever is going to happen head on. Savvy investors know that foregoing a few quarters of distributions knows that they won't dilute their returns by having so much capital on hand that they can continue these distributions. But it also means that we can stack that cash and be able to meet debt obligations if tenants just stop paying. We can pay our tax bill, we can pay our insurance bill, we can pay our employees, we can pay our workers. All of that stuff can continue to operate as normal so that when all of this stuff blows over, we can turn the switch back on and really crush these returns, but we can't do that if we run out of money. Now, obviously, some investors are thanking us, but others are a little fearful, right? And it's totally understandable. The name of this channel is Fear-Free Passive Investing. So we got to obviously address the fear in this. Now, keeping fear and level-headedness is something that's really tough for some people. I would say that most of the investors that I talked to didn't really have this in their mind. And whether they actually were fearful or not, I can almost guarantee some of them are feeling some sort of fear of not getting their return back. Now, that's totally normal, but let's remember to keep a level head. This is a business that pays us cash flow. People have to use it, and it's one of those things that's very stable throughout economic issues like this. This is why we invest in this in the first place. And really, who knows? If you're a passive investor, I wouldn't panic right now. It's really too early to tell where things are going right now. April rents looked okay. May could be very different. But the most important thing that we need to focus on is not letting fear cripple us into seeing opportunities right now. Now that could come in the form of a different investment, that could come in the form of utilizing a new company that might come out of this. Either way, some businesses are going to fail, some are going to thrive. Our businesses are in a really good scenario to thrive in this, but we need level-headed investors, and that starts with you. And we need good quality sponsors, and that's on us. So making sure that these two things are in sync is critical. And that's all I've got for today. I just wanted to make a quick video about distributions If you are a passive investor and your sponsor has stopped distributions, let me know down in the comments if you're feeling good about that, if you're feeling bad about that, if you're nervous, you're excited about opportunities, just let me know down there. I'd love to talk to you a little more. Also, two other things. One, if you have an idea for a video, or if you just have a question and you want it answered, let me know down there too. I'd love to deliver the content that you want to see. And two, please don't forget to hit that like button. It really helps me and it helps other people to get started in this. So it will be mutually beneficial. So thank you so much. Talk to you soon.